Welcome to Taking Stock, or I should say Working Lunch. It's Tuesday, the 1st of August, 2023. Martin's back. It wasn't too bad the first time round, Mark, was it? It was all right.
Yeah, just about. I mean, we've got a huge number of Instagram followers now, haven't we? Because, us two sex symbols being on this at lunchtime, I mean, it's going crazy out there.
Yeah. I mean, Chris from Vauxhall, he did like that. He said two middle-aged, bald Welsh fellas talking about stocks and shares. Is there anything more appealing in the world than that?
Nothing.
It is.
Every girl's dream come true.
Yeah, exactly. We need to get sort of stocks and shares to a younger audience, I think, because whenever you get into it, I started investing when I was quite young, but it turns out most people doing it. When I used to look up, investing podcasts or webinars, there's always like a middle-aged, almost middle upper class guy just banging on for like hours. I think, what the hell is this?
The only thing available to me when I was young was the Investors Chronicle. That was it, or look in the back of the papers. There was nothing like there is now. So I think if we managed it, I think the youth of today should be able to do it. Although I think we'd be writing ourselves out of a job on this show if we did try to attract the younger groups.
Well, it's nice that Investors Chronicle come in circle, look, because you are sitting in for John Human, who was ex-editor of Investors Chronicle. So there we are.
Indeed.
You nicked his flat. Anyway, listen.
Big shoes to fill.
Yeah, we're going to change the name, apparently, to Working Lunch, because we moved from 11 till 12 p.m. And, of course, if you remember that, you are of that certain age, I think. Adrian Charles, I used to love that, Adrian Charles on BBC Two, talking about stocks and shares and investments. Where is that? We need to educate people again on that and keep that at the forefront. It's better than doing algebra or Pythagoras' theorem in maths in school and never learning about investments. Our education system's knackered. Anyway, the subject of the day is AIM. Have we seen the bottom in the bear market? There's a survey on Twitter, on Vox podcast there. Check that out. What do you think? Because there's some macro data coming up today. I think almost backs us up that we probably have seen the bottom in AIM. And I was saying this 2 weeks ago with John, actually, when the CPI figures came out and they were, better than expected or going down, the market rallied and there was a lot of liquidity coming in the market. We're seeing a lot more placings happening in the junior stocks, which is good. I know investors sometimes don't like a placing, next week fundraise, but, the AIM market is largely for startups and they're not sort of profitable, so they need to raise money. And that hasn't been the case for a while, is it? I don't know if you've had any stories from people, but I've talked to many people, brokers, and said it's been really hard. Companies can't raise, full stop. No one wants to put their hands in their pockets.
No, it has been, but I think it's encouraging to see the amount of activity that's going on, in particular this time of year. Historically, sort of July and August were, the quiet months where everyone's away on holiday. But definitely seeing as much activities and IPOs yesterday and fundraisings going on. It must be an appetite there. I'm not seeing anything to tell me that we've found the bottom. I mean, if you look at the AIM index in particular, during the COVID sort of crash or whatever you want to call the initial crash, the index itself got down around 630. We're trading at 760 at the moment. That's down from highs, which are sort of, when was that? Back in July 20, was it June or July 2022, where it reached about 1300. So, we're a good 600 points off the high. If you look at the chart, we're just in a straight line going down at the moment. There's no indication for me that we've hit the bottom. But it is encouraging to see the amount of activity that's going on, and long may it continue, I say.
Yeah, well, I'm going to share a chart. I disagree with you. I think we have it at bottom. I think the fact is the liquidity is better. People can raise money. I know you hate this platform, Mark, but this is a chart of AIM, right? Now, we had the big sell-off in October. That was a low. And then we had a lower low here. We do need to get above that almost low in October, I think. But I think this bounce here, when you see an aggressive bounce go down and bounce back up here, I think that was the low. I think that was the low because it also coincided with those better inflation figures. And when you get that, that's what the Bank of England are looking at. Of course, this week, the Bank of England come out with an update on what they believe, a quarter of a percentage point. But we'll talk about macro a bit later. But
but for me, looking at that, Justin, there's no bottom there. I mean, we're just lower lows. There's not a single higher high there. So how can you, trying to call a bottom or a top is a fool's game. But there's nothing at all that tells me we hit the bottom.
Yeah, no. Well, listen, it's all based on the reason why I say that is because it's all macro based and it's all about central banks. They provide the liquidity at the top line, and I think we are now at the edge of the top, or close to peak interest rates, and it's the direction of travel is going to stop. So it's almost like before we sort of didn't know where they were going to stop rising or hiking to, but now we sort of do. They're very close to it, and we see major rise. S&P 500 in America is like, in fact, the Russell 2000 yesterday, which they've said for a long time, the Nasdaq rallied because of the Magnificent Seven, the big AI stocks, Microsoft, all that, Nvidia. But now the rally is broadening, and even if I go to the Russell 2000 yesterday, it broke out from a previous low, a previous range, or close to, and that's good because it means now it's not just the big stocks that rally, but other stocks are rallying as well. Where is the RUT ticker here? Let's put this in share screen. Let me share the screen here. But as you can see, that range there, it's come down. Obviously, I've fallen a lot more than the S&P, and we had a sort of big rally at the top, and it's trying to break up this range, which is a good sign. But and that's
a good consolidation area there as well, isn't it? So a breakout, if that breaks out that level there, comes back, tests it, and goes again, then there's a clear sort of change in direction, which we're not seeing on AIM. There's nothing
lots of individual stocks have rallied. I mean, I've seen many a stock now double, almost bag, triple bag, whatever. There's been quite a few of them, and you didn't see that in the last few months. It hasn't been happening, but it's happening more, more often these days. And so that kind of liquidity going, I think we have seen the bottom. Anyway, let's put a bet on it, Mark. I reckon that's the bottom. You
might be right. I hope you're right, Justin. I hope you're right. But you show me a higher low. Okay, you show me a higher low.
I'll show you one next week.
Yeah, exactly. Yeah.
Okay, so first and foremost, so listen, if you can subscribe, like I said, you'll get notified when we go live. We could change the time, who knows, and you wouldn't know when we're going live. So subscribe, please, and that's coming on nicely, subscribers. But comments, okay, comment below if you want to. And we had a comment yesterday after we went live, and I've mentioned Ondo InsurTech quite a bit. A cracking company. It has technology that detects leaks, and of course they do deals with insurers, because the biggest insurance claim of all for any household is leaks, and it costs the insurance company a lot of money. So if they can detect these before it happens, then there's a good market there. Now, this is a chart, Mark. You like this? So let me just get Ondo technology up, Ondo InsurTech. This is one of the companies. Look at that. This is from...
That's a hell of a move, isn't it?
Yeah, 6.3 pence up to 37 pence. And they had their final results out. And this is what... Alistair said to me, and he's in this. He said, will you be covering Ondo annual results tomorrow? I think the report covered everything you wanted to know, very positive in all respects, but perhaps you will continue to sit in the fence. I do think you have been looking for potential problems where there clearly aren't any. One of the key skills needed to benefit from major multi-bag opportunities is knowing when to stop looking a gift horse in the mouth. I fear that if somebody gave you a free brand new Porsche, you'd probably walk around it skeptically, kicking the tires. No, I understand what you're saying.
What's Alistair trying to say to you?
I know. Alistair's a holder of Ondo InsurTech, of course.
Is he really?
Listen,
God, there's a surprise.
Yeah. Listen, I was thinking of getting into Ondo, right? And I'll show you the level.
It's a good little company. I mean, obviously they've been. The performance has been amazing. I mean, fair play to them. Well done, all the shareholders.
Yeah, I was thinking of getting in around here, but I looked at it, right? And there's 18 odd pence when it came back to pull back. And I looked at the value, I looked at the funding, and those two are the issues that stood out to me, and they still do, even though the financial results are out, they still do. And now, let's be honest, I missed it. To me, that was it's a hope by potential stock, and now it starts to generate some revenue. And you've got to look at valuations then. Before that, it doesn't have to. So they put the results out, and this is what annoys me sometimes about companies. We just get Vox up here, Ondo, right? So results generally, total voting rights and shares in issue update. So that's today. Annual financial report, AGM notice. So I looked down and this is good. And lots of good figures in here. Fair play. The growth is very good. It's from a small base, but 2.4 million top line. And it was not even a million back last year. They've extended their period for 18 months. So the comparatives on, well, in fact, they're still good comparatives on 12 months, I think. Yeah, 2.1 million for the 12 months, up 182. So lots of good figures in the year, huge growth amongst many things. The amount of units they've sold has got massively. The outlook period is good. They've got contracts with big companies. And the thing I was worried about was the fundraise or the funding. They did sort of raise some money, 800,000, and they had 500,000 of warrants coming in. So it all looked great, and the share prices continue to rise. And they put out this thing here, which is very good. Well, I don't know about this. I mean, there are potential. They talk about market penetration, and there's, in fact, Craig is welcome to come on, CEO. I know he sort of follows me on Twitter. I follow him, and there's lots of good advice or stats in here about the market size. And look at the graphs here; it's all looking good, all shot up, right? So you're thinking, so what's the problem, Justin? It's looking good, isn't it? Just get into it.
Oh, go back. What are the warrants though, Justin? What's the strike price on them?
The warrants are 21.8 pence. Now, so the thing is, that what annoys me about that RNS, right?
Surely they're going to have fun, because what are they trading at? They're trading at 36, aren't they?
Yeah, 36.8. Yeah.
But obviously they're going to take up the warrants if they're sort of the 21 pence.
Yeah. So my concern was this, right? First and foremost, where was the financial report here? I wanted to see the financial report. I think there's a couple of companies who've done this in the past. To me, I want to see the figures in the RNS. Okay, the highlights. Okay, so I have to click through, go through the website, find out what the figures are. Because how many of you investors, put your hands up, if you're an Ondo holder now, did you actually click through, actually go to the financial reports? Because that's a good start, So I went through
the highlights. They got the highlights, and I think a lot of investors just want to, deep. Not everyone's going to deep dive the way you do into them. I mean,
but if you're going to be a decent investor, you've got to have highlights. And Alistair, by the way, I thank you on baggers and baggers advice for that. But I have had baggers in the past. I've had 3 10 baggers, 1 5 bagger, 1 3 bagger, and several baggers. So I've had plenty of baggers. But look, let's go into this. These are the figures, all right? This is what I want to see. I put these into my spreadsheet. And so these are the figures here. And you've got gross profit 850. So the operating losses 5.8 million. That's my worry a little bit. Okay, pre-tax profit 6.2. In cash, as far as cash is concerned, they use 4.7 million in cash. So you understand the kind of cash they need. They're scaling up very quickly, which is very good. But with that comes costs. So they've got demand for their product. That's good. They're a great product. And with that comes, costs. And so if you look at this, if you look at the stats on this, this is the 12 months here, and you scroll down, there was growth in revenue, but everything else went down. Everything else went down. Value-wise, there are price to sales of 11 times. Now, that's quite rich. I mean, if you look at a company like this, you'd think, 3 to 5 times maybe, if it's that growth, but 11 times? So 2.4 million, they're now valued at what? The market cap's 28 million. The enterprise value is 34 million because they've got 6.4 million of convertible debt there, which is not going to be converted. So it's looking, good. So that's, first of all, is the value, and then there's the funding. And if you look at what they say in the financial report, they do say the directors have concluded that it will be necessary to raise additional funding within the assessment period. They did say they raised £815,000.
They've got the warrants there. They've got warrants to cover it.
Yeah, but they said beyond that, they will have to raise more. But they do say they have 7.2 million in warrants outstanding at 21.8 pence. That could suffice what they need, but they can't rely on that. And you'd be surprised sometimes how many people don't convert warrants.
I think you and I disagree on this, though. I mean, if it's a genuine company and they're a genuine growth story, that's why companies are on AIM, is to raise money.
Exactly.
So it's the thing, as an investor, you shouldn't be scared of a company as long as it's for the right reasons, raising capital, because, as long as you're not investing in some lifestyle business, that's never going anywhere.
Listen, I completely agree. I really like this company. It's one of those things. They've got their own IP, got lots of patents, they've got big contracts. But I'm sure mid to long term, it's no problem. Short term, in fact, they've done it amazingly well. People have caught on the story very quickly, and it's done really well. But like I said, all I'm saying, even they're saying right there, unless they convert all these warrants, they'll need to raise money. And right now, valuation, I've missed this. Listen, part of me is annoyed I missed it because I was going to get in. But part of me
forgot to buy it, Justin. You forgot to.
And in fact, Alistair was right there. I'd be kicking the tires a little bit and saying, "Oh, I don't know if I want this free Porsche." but yes, what I'm saying right now is they need to sort of raise, and I think what they should do, if the warrants don't do it, then they've got a big following, and they could probably do open offer with because there's a lot of people out there. So what I'm saying, it's not a huge problem. They will be able to raise money, but they do need to raise money. And beyond that,
some of the open offers are very expensive to actually do. For the company's perspective, they cost a lot of money. Take it from me, I was a broker.
Yeah.
Expensive. But looking at that chart there, I think if they were to pull back towards this sort of into the mid-20s, then I would probably look to buy them. They're a little bit overextended at the moment. So if I decided, and this could well be one we could pick and go for, but I think as an investor myself, it looks a bit overextended at the moment, the price action for me. I would like to go along, but I'd probably be more comfortable if it sort of pulled back towards that sort of 50-day moving average, or the 200-day moving average. Sorry, where's the 50? 50
50
days
is about
24,
22.
25
Yeah.
at the moment. So yeah, I mean, if it came back to that sort of level, then yeah, I'd probably I'd probably look to buy some on a red day, obviously.
I think it's a very good technology. I really like the company. I mean, I've got no problem with it. I mean, I should have got in. I should sometimes you can do too much research and worry about balance sheets too much. When it comes to small cap stocks, micro cap stocks, a lot of it's about hope, high potential, a lot about growth. Now, if you got that, everything else be pushed aside, because if they got orders coming in, they can raise funds they need to. That's not a problem. So yeah, I have been maybe a little too worried about silly thing called the balance sheet. but no, I think it's a cracking company, and well done, Alistair, on that there, and a lot of the stocks. But
apologies to the listeners as well. You can tell we're live. There's some guy decided to cut a tree down outside my window here. So
you're in the middle of central London, but it looks a bit, Mark. Where's the trees there?
Yeah, I know. Yeah, exactly. Well, it's by Hyde Park.
Let's have a look at the front page of Vox here for some content. Let's scroll up here. So Aterian, in fact, that's an interesting RNS. We'll talk about this. So they are, a tiny little company there, but Rio Tinto has taken a stake in one of their places in Rwanda, and I think it's 7.5 million for their thing. But there's a bit of coverage on that, so worth a look at that. And ATN, because they recently went to the main market. There we are. Look at that breakout on the chart, straight across. But worth a read. I've talked to Charles Bray quite a few times on the podcast. So what is their market cap now, Aterian? Isn't it? Let me go. ATN, not ATM. You wouldn't want a company as ATM. Oh, there is African, isn't it? But ATM is a cash pipe machine. You wouldn't want that on AIM if they're raising money. Lithium joint venture with Rio Tinto, of course. Rio Tinto, a massive company, global player. And they're going to invest 7.5 million in 2 stages to earn up to 75% interest in the license to explore minerals for successful energy transition. So there's lithium play there in Rwanda. So yeah, that's an interesting stock, worth a look. You don't know how many stocks do you hold, Mart? Any resource stocks? Oh, you've got Metal One, haven't you? Have you gone? You're on mute. I think you stopped the guy. I can't hear the guy cut the trees. Don't worry about it.
Oh, yeah, I'm back now. Yeah, sorry. He's stopped for a second, so that's good. Yeah, I haven't got as many as I usually have. So obviously, as I said, I invested in Metals One, which is the IPO, and I'm quite pleased with that. But that's more of a long-term hold, anyway. So
yeah.
Wishbone Gold as well. I quite like that company. They're Richard Poland's running that, and
if you look down, there was followed company. In fact, some of the losers today are people raising money. I mean, there's Predator Oil and Gas raising money. There's Wishbone Gold raising money, of course, at a bit of a discount. So if you really like companies, I mean, it's quite a good strategy on AIM, isn't it? If you know they need to raise cash, then wait for that. That's what I've sort of been doing it. Once they get that, you get the churn from people placing. But then if you look at the chart, then one of the worries is behind them. They've got cash. That's
absolutely
one of the big things.
Well, what I like now about Wishbone's announcement this morning is, I think this year the exploration is going to be a lot more focused, given all the research they've completed and everything. So that's why I like to look at that. On the sources of research. I noticed that Tirupati Graphite as well, or Graphite, they've been suspended. Why was that? Yeah. I didn't. Yeah. I just thought.
So it's about auditors' issues, isn't it? I think because I've seen a lot of this happening. It's not just, and so you can't blame the company. I mean, I've seen a lot of companies saying their auditors need more time. And there was reports out recently saying the auditors are, snowed in with work and they haven't got enough people to get them done. So it's just they're saying they need more time to get the numbers in. So yeah, so I don't think it's company specific. I think it's more industry specific with auditors. So all right, do you hold? Where are? Let's look at the chart on Tirupati. Tirupati. Am I spelling it? Tirupati. I can't even spell it. What's the ticker? That's what my mates. That's my mate's entire investment research. If I talk about company for half an hour, at the end you say, "Okay, what's the ticker?" And you do no more research.
TGR.
What is it?
TGR.
TGR. Okay, so chart. TGR. There we are. Tirupati Graphite. Yeah, look at that. That's a classic sort of downtrend, isn't it? Breaking down over the moving averages. and
I'd say that it looks to me like there's support there, 30p level, isn't it? So
you'd be surprised, right? If you look at it, I mean, I love the charts. I look at them every day, and I look at a lot of AIM charts every day. And there's an amazing amount of companies that are doing this, forming a bottom. That's why I say, Mark, going back to our original thing, is the bottom in AIM happening? And I think it sort of is.
I hope so, Justin. I really do. We need, we need a lot more volume back into the market as well.
Okay. Any chance you could cover Fab Fusion Therapeutics? There's another company, tiny market cap, just raised some money, and they, obviously, I think now the thing is that someone did ask me about this on Twitter. I thought, well, how much money they raise? That's always the thing. When you're a tiny company, the amount you can raise gets less and less, doesn't it? And so if your costs are still the same, you've got to think, well, how much is that going to raise them? We'll have a look at Fab. Let's look on the chart. But I mean, coming down, but.
I mean, they're a sub £5 million market cap company. They're nano cap.
What I want to know is, look at that. Whenever I look at a chart, I always think, okay, what was that? 19th of May. Let's go to Fab here and let's look back on the 19th of May. What happened? And then you go scroll down. 19th of May. Oh, May. There we are. Oh, they were placing a subscription. That's when they did the big discounted fundraise, 1.56 million. And you realize, what now? They've got cash. And also, it's always worth reading these fundraisers. If you've gone through them, what are they using it for? And one of the keys I look for is, will they get to, where they want to be? How long will it last for? And if they say this will take us to profitability, that's a very good sign, or EBITDA positivity. And in fact, a company who's done that today, worth looking at actually, is Saietta Group, SED, of course, the axial flow, EV motors and all that stuff. They did this big deal with ConMet, which is a big company in America. But it's quite a long time frame to fruition, and it's tying up a bit of their capital. So they've restructured that, because now they're doing, it's really sort of taken off in India, some of the contracts, and they've signed big contracts there. So this will help them. So they've restructured this American part of the deal, part of the thing, and they've been given sort of $3.3 million and euros. And what I like here is Tony Gott, the executive chairman. He says here, this development is fully aligned with our strategy of driving Saietta into a positive EBITDA as soon as possible, with a target of early 2024. Now, you assume you don't want to raise much. I mean, the thing is, they haven't said they don't need to raise, but you assume they don't need to raise money before that. So where are we? The second half of 2023 now. But I did buy some Saietta.
Look, I know Paul, who works with Hill. He's interviewed them a few times, and they've come across very, very well, as far as I'm concerned. I think they're an excellent company.
Yeah. Well, look at this. I mean, IPO'd here pretty much 134, or so, doing the bull market, really got the hope potential of EV, plowing into it. Then almost the wheels came off, on the EV vehicle there, and it started rolling downhill quickly. And the thing is, it's like that. Momentum's like that. How do you stop a vehicle rolling downhill? You don't. It's like hard work. I did buy in down here, and it literally shot up. It broke the sort of 15 moving hours, bought in, it shot up and gapped up, and I put a stop loss in here somewhere. In fact, I was at Siam Park in Tenerife, and I looked at it, and it just kept rising and rising. Whoa, all right. And then just broke down, and I had a stop loss right here, and it just kicked in. And now it's back down here. I'm looking at it again, thinking, okay, if this breaks above this level, now this almost like this 50 pence level, could be good, because their top line revenue, look at their broker's note, is forecast to go to 12 million, I think, next year, and treble then to 36 million the year after. And that's when they become profitable. I think adjusted pre-tax profit of 9.4, I think, for 2024. So they are looking to be a profitable company, and in a big area. Let's be honest, I even started looking at EVs on the weekend. You got an EV, haven't you, Mark? So I was looking around for EVs.
I have indeed. Got my Tesla.
Yeah. Are they like EVs? A friend on the road just got one. He said he just bought, I think it was a Kia EV6 or something, I was called. But he said it's the best car I've ever driven. Technology is amazing, and it's so fast. And so he's really impressed. Were you impressed with your Tesla?
Yeah, when I first got it, I was hugely impressed. I thought, this is brilliant. It's a bit like, I was explaining to one of my friends, it's like I've had a Nokia 6310 phone for years and quite happy with it. And then somebody gives me an iPhone and you go, shit, I can do so much more with it, But what I would say about them, the experience is very it's a very digital experience. The driving it, there's no sort of soul to it. You know, when you drive an old car that we kind of grew up with. I remember having an old XR3, which was like, you know, when I was younger, and I was a brilliant car. It was a great sort of thing to rate, you know, hot hatch kind of car, you know, and you get that feeling. You don't get any feeling. There's no sort of soul to driving an electric car. It's a bit soulless.
Yeah.
That's why I won't sell my motorbike. I need some thrills in my life.
Yeah. John Morty, right, is obviously an investor in Ondo. I said, also regarding Ondo's operating loss, you again neglected to mention that it includes reverse acquisition expenses, which are not recurring costs. You need to be more transparent or lose credibility. I'm glad you think I have credibility. I didn't realize I lost it. No, but John, listen, listen, okay, fair enough. There may be not recurring costs, but you'll be amazed how many non-recurring costs sort of recur, or one-off costs happen every year.
This is the whole reason we've started the show, is so we have these discussions, because, you know, that's down then to either the company themselves, so not clarifying that in the notes, or we haven't seen it. You know, we need this clarity to be able to sit down and actually look at something. So, you know, we need to invite these lads on the show, tell them to come on, and we'll have a chat about it.
Get Craig Foster on. I mean, the thing is, I mean, John, I like the company. I know you're a shareholder, but I want to keep the discussion nice and friendly. I understand that, but what I want to see is, first of all, transparency. I think that the entire email should have been in their RNS first and foremost, you know, rather than dig around on a website for that. Honestly, I couldn't really find the report. And then going forward, I would like to see some broker coverage on this and see, you know, when they're going to attain, hopefully, you know, break even profitability. I would like to see that, definitely. But I'm up for it. Listen, John, I'm not. All I'm saying is this: I have concerns about. These are short-term concerns. And I said, I don't think they have any problem raising money at all, because it's a great business and they've got demand for their product. And when you have that, they shouldn't have problems raising money. So that's all I'm saying is they probably need to raise money. It says in the financial report. I'm being transparent there. That's their words, not my words. You know, they do say they need to raise money. So there we go. But having said that, you know, it's a good company, and well done for getting in and holding the stock. It's a good company. Okay, let's look at some other bits of news. Aterian, most followed. Harland and Wolff again. They're going to be a bit of news out again. It's not a bigger contract this time, but it's nevertheless, it just shows, isn't it, when you sort of get this momentum behind you news-wise. And I think John,
incredibly interesting company, and it's great to see that sort of you know, all these contracts coming through for Harland Wolff. A few years ago, they were sort of almost pretty much gone. But I mean, the team there, they've turned it around. It's really exciting company, and I really like these. I'm a big fan of what they're doing. Huge contracts. Obviously, the margins aren't as big. So, you know, it's buyer beware when you see these huge contracts coming in for millions and millions of pounds. But, you know, it's great to see this kind of industry coming back to the UK.
Yeah, and if you look what John Wood says here, it's our reputation, because this is from a Korean-based Pan-Ocean group. So obviously their reputation is spreading. They say our reputation and recognition for handling large complex vessels in Belfast is growing globally, and this bodes well for a number of similar outstanding bids that we've made. We expect the Belfast yard to be busy over the course of summer, and it's pleasing to see momentum that's developing. Did it rise here?
He's had a good run recently. He's come off a little bit. Yeah, that's you know, that's traveling and arriving going on there, isn't it?
What I would say is try and avoid the first hour of the market if you're going to buy. Maybe if you're not going to sell, depends what it is. If it's an unknown stock and you've got news out, then you try and buy. But you often see, obviously, because there's no volume before the market opens, a tiny bit of volume can move the stock. So you'll see a jump up like this, and then all of a sudden you get a couple of sellers come in, it'll take it back down. So
issue there you've got is the jobbers these days. They're so risk averse. Any news out and anything first call, they'll just call them up and see what happens. You know, and that's what's happening. They're probably call them up and go short on the book with them.
Yeah. So another quote here. Another regarding Ondo's cash balance. Today's RNS shows a further 100k of warrants were exercised yesterday, and the US contracts are paid up front for a year. Contract signings have plenty of cash. John, thanks for that. I just highlighted what they said in their financial report about them needing to raise cash. That's not my words, that's their words. Okay. Fab, Fusion Antibodies, what it's called. Fab is due to earn 2.7 million this year. Their market cap is 3.89. Also had John, you're giving a good sell here. Ondo also had 400k of inventory on the 30th of March and have since commenced large-scale rollout in Sweden that is including the results. The US trail bought 600 grand upon contract signing. This is what I like. John, I like you. I want you to join in more. See, you're educating me, and I know more about Ondo because of that. Because one thing is you can read a financial statement. I see people sometimes not know companies, but what they tune into is financial statements because, of course, it's the round up the year, but they're 6 months out of date. So, you have to know the story to understand, well, that's historic anyway. It's not relevant going forward. And you're now painting the picture for me, John, that obviously these, the inventory was in there, but the £600,000 and all that. And in fact, the RNS today was...
Why do we do this, Jack? Why don't we get John and Alistair and Chris onto the show, and they can convince a couple of bald-headed Welsh dummies like us to why we should be buying the stock.
Yeah.
So in fact, there was challenges out there.
Yeah, there was an RNS today about total rights issue warrants. So, so what's the market cap now? Let's look at my calculator out. It'll be on the thing because I just updated it today. Actually, it's inside. So times 0.368. So they are 28 million, and they're just it's the 3.4 million of warrants were issued. So they've got cash coming in. See, that's decent. But I've just read what they said in their final results. All I want is final results as well. There's a company used to do that all the time. Just release results and never put it in the RNS. And it's so annoying. You have to go fishing around their website trying to find it. Just put it in the RNS. That's what you're supposed to do, isn't it? Harland Wolff, we covered Saietta. Belluscura, of course, is another one that sort of Paul talks about today. It talks about a bit. He talks to the guys. It's an interesting contract.
It's a very interesting company. They came out of Tech Capital. It was one of Tech Capital's portfolio companies. I believe Tech Capital still have shareholding in them as well, so there's still an interest anyway. But a very impressive company. I think they're about 40-odd million pound market cap now, and they.
It's the ninth largest company by revenue in the US, a distribution agreement with the world's largest drug distributor. So, it's they're a subsidiary of a big company, but that's good. They're getting to areas for distribution because you need that, of course. So, that's nice. And in fact, check out Paul's content because he often chats to the guys and talks about it on Vox there. So that's good. Let's go to rises and fallers. Let's go screen share a second. Rise and falls. We're over half an hour already. But
we need to speed it up a bit.
Mode is literally. I was surprised. I saw Jonathan, who's the founder and CEO, I think, on Twitter, showing the share price rise yesterday on this, and I thought they'd gone through. I thought they'd gone into administration, and it turns out now maybe they're not. So obviously
they were suspended for a while, weren't they?
They're a crypto platform that gives you rewards in crypto. So if you buy through the Boots or all these different stores, I think Boots actually pulled the deal with them, but you get crypto in rewards. So and the FCA license, Upland is rising, Boyle, Fall is there. There's something else I want to look at, but let's just quickly go to macro because we're running over. Journeo. This is annoying. This is a company that annoyed me. Journeo, a trading update, worth a look. I was looking at this company quite a few times.
You get very easily annoyed, Justin. I mean,
I do. I should see about that. But this company here, the trading room. Look at the if you go look at the sort of the news on this company, they're releasing contracts all the time. What are the displays for like buses, trains, all that, those digital displays, and also backup software as a service in revenue. And for a while I looked at them and I looked at them, they're not breaking out. They broke out and they haven't come back, but their update is very good and it's worth checking out, but we haven't much time. But check that out. Journeo, JNEO is the ticker there. And finally, there's three macro stories here. I think it's going to help us as far as the markets are concerned, and that's prices. House prices are coming down. 3.8%, biggest drop in 14 years. But people don't. It's not like I say. I would love for 3.8% drop in my stocks in a year on AIM. 3.8%, is that all? It's like, you do that, double that in a day, easy. But on certain stocks. But so it's no big worry there. But what it plays into the fact is lack of demand, there's mortgages going up. It is choking off demand here. And in fact, food price inflation is coming down, the lowest level this year, and UK factory output falls. This is all feeding into the story of, reducing inflation, which the Bank of England are looking at. And so I say it's very unlikely it'll go above 25 basis points. If they do a pause, the markets will rally, but I don't think they'll do a pause. They'll probably do what's...
No, I think it would be damaging to pause it, but I think, you know, it has to be 0.25% now on Thursday. I think if they pause it, it'll be we need to see this consistently falling for 3 or 4 months before they start pausing and, you know, reducing it, I'd say.
Yeah, and essentially this is bad news is good news. This is the economy slowing down, which is what the Bank of England want, and of course that will reduce inflation, and then they won't need, and so we're towards peak inflation, and that's why I think you know, the market's at the bottom there. Let me just find out this result of the Twitter poll to finish off. So do you think we've hit a bottom in the AIM market? So we got 36.8% say no, 63.2% say yes. And I know that's spot on because everyone that follows me are super smart.
Super bullish.
Yeah, but I'm not as smart as John. John knows more about Ondo than me, and that's exactly. That's why there's room for this show. Smart private investors like John and you know, and Alistair. We want your input, you know, and that's help because you know more about the story than us. And it'd be nice to get that out there so people can.
I'll tell you what. Why do we? Because we've dropped taking stock now as a brand. Why don't we have just one show, 20 minutes? They can come on and we can discuss with them. They can have as much prep as they want, and we can discuss with them. They can convince us why we should be bullish and buyers.
Yeah, exactly. Marvelous stuff. That's it.
All right.
Take a start.
Apologies for the sound in the background.
Yeah, that's all right. Speak to you.
Subscribe.
Bye bye.
Cheers.